This show is produced by the Hartman Media Company. For more information and links to all our great podcasts, visit hartmanmedia.com.
Welcome to the American Monetary Association's podcast, where we explore how monetary policy impacts the real lives of real people and the action steps necessary to preserve wealth and enhance one's lifestyle.
It's my pleasure to welcome Chris Skinner. He is chairman at the Financial Services Club and founder of Finanser. He's author of the best-selling books Digital Bank, Strategies to Launch or Become a Digital Bank. Digital Human, The Fourth Revolution of Humanity Includes Everyone, and the new book, Doing Digital, Lessons from Leaders. Chris, welcome. How are you?
Yeah, I'm good, Jason. Thanks for having me on.
It's good to have you. And you're coming to us from Poland, a great place I've been to many times. What city are you in?
Just outside Warsaw in the suburbs. Luckily, we moved to a place with a big garden in November, so it's not been so bad for the last 3 months when we couldn't get out of the house.
Right. Absolutely. Yeah, the world has really changed. And all of this change is accelerating what economist Joseph Schumpeter called creative destruction. And it is really accelerating change in the world in so many ways. A lot of it for the good. I mean, a lot of things that would have taken 5 or 10 years to happen in terms of convenience, technology, so forth, are happening right away. And so there's definitely some good that's coming out of this, no question about it. But tell us what's going on in the world of money and banking and how that affects all of us and the economy in general.
Well, I've been saying for a long time that banks are challenged fundamentally by technology because they have, in many instances, not upgraded their systems for over half a century. A stunning statistic from Reuters is that 43% of the big bank systems in America run on COBOL that was developed back in the 1970s in most cases. So this is an issue because today everything is being born on the internet and everything is moving to be cloud computing based, and allowing people to plug and play software wherever they want to be able to work in whatever way they want. And that's led to what's called a FinTech revolution in the last decade. And in particular, in the last decade, there's been a big pressure on banks to move to being more digital. And they've resisted that move because they have leadership that doesn't understand technology that well. And then the lockdown arrived, everyone had to work from home, and they've all suddenly found that they've left those decisions way too late because they didn't have a digital backup to their physical operations. They only had physical backup, and suddenly they needed digital backup and they didn't have it. So we're going to see a massive change, not just in banks, but in retail and all institutions to digitalization over the next couple of years that might have taken a decade. It's going to happen in 12 months.
Yeah. So their old systems, the software that runs their businesses, just won't integrate with the internet, or how does that play out?
Well, a lot of people describe the systems of any large institution that's been around for more than 50 years as spaghetti structures. And what they've got is a lot of underlying core technology that's dating back to the 1980s, 70s, or even in some cases the 1960s, you wouldn't believe. And they've layered everything on top of it through the years. So it's now become incredibly complex. And I liken it to the New York subway. If you try and put in a brand new subway line, navigating through the existing subway system is incredibly difficult. And that's what banks are trying to do, and large companies are trying to do when they add the internet to their old systems. Instead, what they should be doing is re-architecting completely fresh and new for the internet era and the digital era, and eventually dumping all those old systems.
So tell us how it will change. I mean, what can we expect, and what will happen to the criminal organization known as Wells Fargo, or the criminal organization known as Chase or Bank of America? They've all had their foibles, but lately Wells, wow, it's like one scandal after another. It's incredible. Are these banks just going to kind of fade away? Will we all be using Venmo, or what's going to happen? What does this future look like?
Well, I keep coming back to the fact that unfortunately the big banks will not go away. They'll just get bigger. We thought they would disappear after 2008 and the global financial crisis, but they've actually gained market share and they're bigger than they ever were.
And they've consolidated more. There's a lot less choice, right? Yeah. Because the too big to fail created a consolidation of power.
Exactly, and that will continue. And a lot of that's to do with the way in which the financial system is completely integrated into the governmental and economic system. And so you can't take that away. And because a lot of it's to do with trust and regulation, then it's very difficult for it to change. And in my lifetime, I've spent many times thinking that banks would eventually disappear, but they just get bigger because of that regulatory structure. There's an interesting statistic again in the US, which is the average bank in America deals with 128,000 regulations. The average technology company deals with 27,000. Mm-hmm. So it's 5 times more regulations to deal with than if you're dealing with pure technology play. But what is happening is the pure technology players are starting to make an impact, particularly around credit, loans, payments, and savings. So, you're absolutely right when you mentioned Venmo or Square or Stripe or Lending Club, Sophie, all of these new companies that have just appeared in the last 12 years, born on the internet after the financial crisis, are really starting to have an impact. But the impact is on the margins and profits. It's not on the core business of banking.
Mm-hmm. But Stripe isn't a bank, for example. That's just a merchant credit card processor, right? Or is it more than that?
Well, it's a little bit more than that. I mean, they're my favorite FinTech company. And FinTech is this term that describes the integration of finance and technology that's come around in the last just over a decade. And a lot of that's resonating around cloud computing, the internet, and platforms and marketplaces, which are all terms you'll hear.
But I don't get it. I mean, Authorize.net, a big old credit card processor, they have a website. So does Stripe. Stripe's is better, but what's the real fundamental difference?
It's nothing to do with the website, Jason.
Yeah. Okay.
Stripe's unique aspect is that they offer beautiful sort of piece of code that allows checkout to be created really easy and simply for anybody trying to do merchant checkout as a company on the internet. And it's just 7 lines of code. And they launched in 2011 and they're now worth $36 billion.
Oh, I know. They're amazing. I've followed their story.
If I put that in context, one of the oldest and biggest banks in Germany is Commerzbank, and Stripe is over 7 Commerzbanks in value. So
isn't that amazing?
It's a phenomenon.
Yeah. But just to ferret that out a little more, and we don't have to belabor this point. If you sign up with Authorize.net to do your merchant processing, that's sort of an old company, or you sign up with Stripe, I mean, they both have integrations. A lot of various merchant websites just have like a one-click integration. They'll both integrate, right? Or what am I missing there that makes Stripe such a big deal?
I think it's the simplicity and beauty of the code that they developed and offer. And they do have competition, but it's not from companies like Authorize.net. It's more from companies like Adyen or Alipay, players from different industries and countries and different markets. And the reason why Stripe's been so successful is that they got a lot of traction with the new big players, the sort of Ubers or Lyfts or the Airbnbs of this world. And as a result, that traction gained a lot of momentum. And when people are developing code, they look at the plug and play code, which are called APIs that they can get from other players. And what they tell me is Stripes, the engineers and developers that are developing code online look at their code and go, oh, it's just art. It's beautiful. So it's almost like saying, would you rather have, Authorize.net, which would be, let's say, U2, or would you like to have Snow Patrol or Taylor Swift or, whatever? But it's kind of, do you want some old guys on the block or new guys on the block?
Yeah. Well, something a geek would appreciate for sure. But, okay, what about all the other services that banks offer? I mean, banks offer a variety, a whole cafeteria of services, and they largely suck at it. They're pretty bad. The service is pretty terrible at banks. Everybody complains about them, kind of the way people used to complain about the phone company, the old traditional phone company, Are these services all discombobulated among a bunch of different companies now, or maybe none of them exist outside of banks in terms of, certain services? I mean, there's a whole infrastructure of various services, right? A big variety.
Yeah, I mean, what's happening, and I often talk about this specifically, is that there's thousands of new companies doing one specific thing, like the Stripes and the Adyens of this world and the Squares, just doing a retail payment or merchant payment online with a bit of code. So that's stuff that is replacing just a very small piece of processing within the financial network. And when you think about the financial network, investing in mortgages and real estate and payments and high street deposit taking, full service accounts, et cetera, there's a myriad of services that banks are offering. integration. And what's actually going to happen over time is they're going to start providing those services by picking these guys who are the new kids on the block and bringing them to the customer. I call it the curation of technology, which banks haven't got there yet, but some are moving in this direction, more and more quickly, of saying, we know we can't develop everything ourselves. We're not good at everything. We're going to start bringing the best things out there to the customer, and we'll do the integration, we'll do the delivery. Because why should you or I as a customer go and find out, can I trust Stripe or Square or Adyen or Alipay? Let the bank do it for me and then bring that to me and make it something that's a really great service.
Mm-hmm. One of the bank names that comes to mind that was probably from the sort of the first .com bubble era is Ally Bank. I remember I called them once, and it seemed as though the disconnect was they just do consumer banking, and I need business banking, so they weren't for me. These old-fashioned banks really seem to still have a lock on, real business level services when it comes to banking. I mean, I assume that will change, but with all the know your customer rules and so forth too, how do you really operate an online bank when you can't meet your customer? That's I guess another part of it, right?
Well, times are changing, and it's all around timing, to be honest. And that, for many years, there's been many technologies that everyone's forecast will change the way we do travel, shopping, buying houses, by doing banking, you name it. And it hasn't actually made huge differences yet. So Ally Bank was kind of maybe before their time. And now you've got Chime in the US, which are doing pretty well. And in the UK, it's been really interesting because there's lots of new banks that have been launched. The two biggest names are Monzo and Starling. And Starling, it's only been going for 3 years, already has almost 3% of the UK small business marketplace. Monzo's got 3 million account holders, which is pretty substantial in a market of 30 million accounts. So you start to see changes happening, and it's just timing. And one of the really interesting things about the likes of Chime and Monzo is what they end up doing is becoming quite hip and cool as brands, because people like to show their card and their service. And so they get your lifestyle payments and services. And the old banks still, maybe you have an account with them. You still might have an account with a Wales or a Chase, but they become boring old bank with boring old bills. So it's your utility bills for electricity and gas or whatever. It's your mortgages and loans and foreign exchange. But your everyday living is in the new hip and cool bank.
Mm-hmm. Yeah, interesting. Hey, let's switch gears and talk about your other two books for a moment, if we can. Well, really not two, but first of all, strategies to launch and become a digital bank. Can anyone do this? Is this a business opportunity for the common person, or is it still only for banksters? Banksters.
No, it's for anybody. It's for absolutely anybody. One of my favorite stories was a bank that was launched in Britain. Unfortunately, it didn't succeed for various reasons, mainly to do with funding, but it did get quite a lot of users and a lot of support amongst the millennial and the Gen X community. And it was a bank called Loot, launched by a 21-year-old university dropout who was a law student.
Yeah, Loot. Love it. So, but in the U.S., I mean, you've got to get FDIC insurance, and that's got to be super complicated, right? Navigating that, you've got to have, a million FBI background checks and tons of regulations. So when you talk about launching a digital bank, is that outside of the U.S., or can you do it inside the U.S.?
I mean, Monzo and N26 and others are coming to the US and Europe. And what they've realized is that the best way to start a bank is not to be a bank. It's to be a prepaid card with a cool brand. And then you build the online community, the social network of finance, and you do it in such a way that people like the way that you talk and the transparency that you offer, and you gradually launch more and more services. And Loot, going back to being launched by a 21-year-old university dropout, it wasn't a full bank. What it provided is the front-end app. And it then brought in APIs and back-end services from other providers who did a lot of the regulatory piece, for example. So Wirecard is a big financial back-office provider in Europe that does a lot of the pain of regulation and allows people to go on and do the cool stuff at the front.
But how much capital are you talking about that someone needs to start a bank? I mean, that sounds like just a giant undertaking. I do see the path that you mentioned, and I think that is really cool, by the way. you start with your audience, and you start with maybe one application, and you build from there and just keep adding services. But when do you become a bank? Sort of what's the definition of that? It's, I guess, when you take deposits, right? That's a bank.
Yeah, I mean, to be a full bank, you have to take deposits, and that's when you have to have the FDIC capital coverage of all of your operations, and you also have to have the due diligence of the Federal Reserve looking over your shoulder, making sure that you're doing the right things, you've got the right governance, the right people on the executive team, etc.
That sounds like a lot of money in compliance costs, in lawyers, accountants, auditors, etc. Software.
I'll tell you, Jason, the minimum amount you need to be a full service bank from the get-go is $30 million. And that's just to get the license. That's not to launch the operations. That's just to get through the gate.
Right. So $30 million is considered ultra wealthy, 30 million net worth and above. And so I don't think a lot of our listeners will qualify for that. I actually know that a couple of them will, but
if you roll it back to my university dropout, you can launch the tertiary services with $50,000. You don't need 30 million, and then you build and build and build. And as you get the momentum, you get the venture capital and investor support, you get the customer support, and you take it from there. So it's step by step. Don't try and eat an elephant all at once. Do it one piece at a time.
Okay. So the future, and in your book, The Digital Human, you talk about robotics and other fascinating things. Let's switch gears and talk about that a little bit.
Yeah, I mean, I'm a big fan of technology. I've always been in the technology industry in financial services, which is why I always talk about those two things. And I always focus on the future because that's what we don't know. But what was interesting is that until the pandemic, I've pretty much been traveling nonstop for a decade, and I've seen nearly every nook and cranny of the world. And I generally ended up in museums and churches and temples, learning a lot about the history of humanity. And it kind of struck me during those travels that we initially became human because of shared beliefs, because we could communicate, because we have a voice and a larynx. Then we had another revolution when we became civilized and created farming so we could live in cities and towns. And then and at that point we invented money. Then we had another revolution when we started to connect across borders and across continents and went through the Industrial Revolution, which is when we invented banking. And now we're going through another revolution because for the first time ever in humanity's history, every single human on Earth can connect directly in real time, anytime, all the time. And you and I are experiencing that right now because we're on different sides of the world. And I have Zoom calls almost every day where I'm meeting people in every single country of the world. The fact that I still have that global connectivity, although I'm sitting at home for the last 3 months, is quite incredible. That's never been something available to humanity before. And it's changing the way we think and do things. And a lot of what's happening right now is going to turbocharge that technology transformation. I just was writing something about 2030 arrived in 2020, which is because when everyone's been locked in at home, suddenly everyone said, well, we have to do things differently. We have to shop from home, get everything delivered. And that behavioral change is going to be a fundamental shift that will actually impact. Yeah. It'll impact your audience massively because of the real estate drop. Mm-hmm. In the UK, I just got a statistic that they just eased the lockdown and everyone's gone to the shops. Mm-hmm. But compared to a year ago, the numbers that went to the shops is down 69%.
Right. Yeah, absolutely.
Amazon and co are going through the roof.
Yeah, right. And the three primary value drivers for real estate have always been, even since we were living in caves, location, location, location. And 8 years ago, in 2012, I started saying that location is less meaningful than it's ever been in human history. I started saying that on my show back then, 8 years ago. And I was primarily saying that not necessarily because of all the technologies, and we had WebEx 20 years ago. Okay, we had Skype many years ago too. These technologies are not really new, but the adoption has been, somewhat mediocre really until the last 3 months, which is great. I mean, that's wonderful that people are finally really, really using these things. I mean, even my mother now will use all this stuff, right? She wouldn't before. And the reason I said that in 2012 was because of the rise of autonomous vehicles. The self-driving car was going to change the location being so meaningful. And, like you said, you live in Poland in a somewhat out-of-the-way place, it sounds like, and you can still be fully connected That's great. That's incredible, you know?
I was just going to say there's two big behavioral shifts that have happened immediately this lockdown came in. One is that for some reason everyone wants to connect on a video call, which we never did before. Mm-hmm. We're quite happy with a phone call.
Yeah.
And actually, we're connecting more and more often. So take your mother and my mother. I mean, my mum's 92, and yet I'm talking to her 3 times a week on Zoom when I used to speak to her 1 time a week on the telephone.
Yeah.
But the other second big shift in behavior is that people have downloaded loads and loads of apps to have more things that they can do easily on their mobile devices, specifically for mobile banking. Mm-hmm. And a lot of people were wary about using digital bank services. That's, again, completely fundamental shifted.
Yep.
Now, we're not going to go back to doing the way we were doing things before.
Right.
And one of the trends that I spotted, going to your point from 2012 about location is I actually saw it in China first, which is and India, which is a lot of entrepreneurs who had to move to cities to get work have now gone back to the villages because they're using the internet to work.
Right.
And that is a massive shift in the way in which urbanization and society will operate.
Right, but it's also a digital divide because some people can't do that, and that's what we're really seeing. And I think that's going to shift the pay structure a lot. I think all of these people that have been doing these physical jobs have sort of been getting gypped. They haven't really shared in a lot of the prosperity in the economy. I mean, it's just kind of odd to me that, like, why has it always been that food workers get paid so poorly? If you're a waitress, you can make good money with tips, right? Or at least in the States you can. But, if you're the cook in the back, unless you're like a famous celebrity chef or something, you're getting meager wages, and that job isn't very enjoyable, in my opinion. It's just sort of it's odd that it's that way. Like, I don't know why it evolved that way. I mean, obviously a lot of people have that skill. A lot of people can cook. So there's not a rarity to it, but a lot of people can do digital work too. The technology's become so easy. Thoughts on that?
Well, it's interesting that going back to your earlier question, which I didn't really answer, is about robotics and artificial intelligence. Yeah. And the word robot, it actually comes from where I live right now, Poland. It was first used, in fact, in the Czech Republic, which is a next door country. Sure. Yeah. And it's to describe forced labor doing drudgery. Mm-hmm. And that's what robot means. That it's doing drudgery work.
Right.
And so many people are doing that sort of work. In fact, what amazed me, and again to your point, is that when we had this lockdown, who were defined as essential workers? Well, it wasn't bankers and technologists.
Exactly. Right.
People in hospitals and driving buses.
And working at the grocery store. Yeah.
Yeah, exactly. Right. Exactly. And so what's going to happen, and this is a huge debate, and I don't know the answer, being honest, because I'm not an economist, and this is an economic question, is what happens when people no longer need to work? Mm-hmm. How will we structure society?
I've been wrestling with that forever. I mean, is it universal basic income? When you look at the robotic revolution, it's way more than just these menial repetitive tasks, flipping burgers, etc. It's writing music, writing articles, doing all sorts of things humans do now. Are we all just going to live in this world of abundance that's created by the machines, or is there going to be massive unemployment and civil unrest? I mean, which way is it going to go?
Well, we got a little bit of an answer around it during the last 3 months in this coronavirus crisis, which is, what have we been doing at home? In my case, I've been getting much closer to my loved ones, sharing a lot more time with them, trying to learn to speak Polish, which I've never had the time to do before, getting better on the piano, which I played 40 years ago but haven't touched since, and that sort of stuff. And so it really says that I'm in a lucky position because I can afford to do that. Mm-hmm. If you don't have the universal basic income, if you don't have some way for people just to get the basics of food and shelter, then you have an issue. And I think what we'll see is that governments will be forced in the next 10 to 20 years, as more and more jobs are automated, that they will have to give people food and shelter as a basic human right.
Mm-hmm. I agree with you. Even my most libertarian friends that don't want the government to do any of this stuff are saying UBI is the future. It's going to happen, and we're already seeing evidence of that now. I agree. I had Andrew Yang, the presidential candidate, on my show. That was a big part of his platform, was universal basic income, and that's going to happen, right? It's just got to. Do you think so?
Maybe, because there's a downside to it, which you've seen maybe on the First Peoples reservations in the USA, or we've seen in experiments that have been taking place in the Nordic communities in Finland and Norway, which is if people are given everything so they don't have a work ethic, then they can fall off the wagon and start to abuse themselves. It's kind of, where's the pride in not doing anything? So you have to encourage people to do something, but the question is, what are we going to encourage people to do? Is it to be creative and share emotions and relationships, or is it going to be to do drudgery? It definitely won't be to do drudgery. So we'll rise to be something above what we are today, I hope.
Yeah, there's definitely a moral hazard in that, and we're already seeing it with these enhanced unemployment benefits in the U.S. People won't come back to work now that we're having things reopen. A lot of people are just deciding, I'll just stay home and collect my government money. So it's quite interesting. Yeah. Wrap it up with a closing thought and give out your website.
Sure. The website is thefinanser.com with an S, because it's short for financial services, and also chrisskinner.global, which is where you'll find everything about me.
All right. Any closing thought you want to mention?
I think bottom line is, some people said that I'm way too optimistic because Digital Human ends with the view that eventually we move to being far more like Star Trek. And Gene Roddenberry, when he invented Star Trek, categorically refused to allow money to be exchanged because in the future his view was that we deal with the betterment of humanity and not with the generation of wealth. That's an interesting thought. Will it ever happen? I don't know, but it would be interesting if we all just are better humans.
Right. That would be interesting. We'll see if that can happen. Chris Skinner, thank you so much for joining us.
Cheers, Jason.
Thank you so much for listening. Please be sure to subscribe so that you don't miss any episodes. Be sure to check out the show's specific website and our general website, hartmanmedia.com, for appropriate disclaimers and terms of service. Remember that guest opinions are their own, and if you require specific legal or tax advice or advice in any other specialized area, please consult an appropriate professional. And we also very much appreciate you reviewing the show. Please go to iTunes or Stitcher Radio or whatever platform you're using and write a review for the show. We would very much appreciate that. And be sure to make it official and subscribe so you do not miss any episodes. We look forward to seeing you on the next episode.